Hey, so what's up? It's July 1st, 2022, and this is my first live stream. All right. I tried to do it last week. I had some technical difficulties. I think I ironed out most of them, but I had, charts and I had everything. I was going to do, a complicated broadcast with charts to make my points and all this kind of stuff. But I was having, when I was going back and forth from the charts to the image, I was having, again, some technical issues. So I decided to keep it simple this first time and just talk. There's a lot to talk about this week in the markets. So that's the approach that we're going to take. And I hope you just bear with me as I go up this learning curve. Hopefully this first broadcast, live broadcast, will go through relatively smoothly, let's say. Okay, so the big news this week was that the market, the stock market, had the worst performance in the first 6 months of a year in 52 years. All right, that was really something. And just to put it into context, the S&P is down over 20% in the first 6 months. The Dow's down 18%. And as you probably know, the NASDAQ is down about 30%. Okay, this is characteristic of a bear market. We've been talking about that on this channel for a long time, and I've thought that we were in a bear market for quite some time, and I've talked about that on all my videos on this channel. So if you're new to the channel and you're just picking up on this live broadcast, check out down below the content and particularly the best of list, which will give you an idea of the content on this channel. And if you're getting value out of this, please like and subscribe. I greatly appreciate it. Okay, so, one of the things that struck me this week as I was absorbing everything that was happening in the market, and I think this sort of describes both what's happening in the bond market and in the stock market, is I've come to the conclusion that no one fears the Fed, okay? And I think the way I would describe this is like an outgrowth of the way the Fed has really bungled this entire thing over the last year and a half, and has gotten so far behind the curve and has taken even now such an incremental approach that nobody fears the Fed. It's really crazy to me. Last week on my update, I looked at the VIX. The VIX has hovered in the mid to high 20s. In order to have a real flush out, panic selling in the market that basically flushes out all of the bullishness, you have to be in the 40s or 50s on the VIX. And on the video I did last week, which I'd encourage you to take a look at, I went back and looked at in March of 2020 at the height of the fear of the pandemic, the VIX was in the 80s. It was like 85. Okay, so those are the extremes that you have to get to for the market to get washed out and for you to see a bottom. So what I see out there is that, let's face it, a lot of people in the market, a lot of the institutional investors are middle-aged, meaning they're 40, 45. And if you're, say, 40, and let's say you've been, doing this since you were 28, say, it's like 12 years. And during that time period, you have never seen a market where you didn't have the Fed put and you didn't have, the Fed printing money, manipulating the bond markets, keeping interest rates way too low for what they should be, and just, being very, very loose in its monetary policy. And, before Powell, they were basically very easy money, right? After coming out of the financial crisis, Bernanke, and it was very easy money at that point. But then when Powell came in, along with the pandemic, it was, you know, Bernanke and Yellen on steroids, basically, like nothing the world had ever seen before in terms of money printing and keeping rates unrealistically low. So this buy the dip mentality came in because the Fed put was always there, right? Now, I used to think a couple of weeks ago that the Fed put wasn't there anymore, but I think what the market's telling us now, both in the bond and the stock market, and we'll talk about the bond market in a minute, is that people really believe that the Fed put is still there, okay? They believe that Powell is weak. He's not like Volcker. They believe Powell is weak, and if he crushes the economy, and if the economy starts going down, which is what is needed to crush inflation, he's just going to come back in with the easy money policy again and just bail everything out. Okay? That is what the bond market is telling you now. Okay? In the last couple of weeks, the 10-year, and I would have had charts for all this, so I apologize. Next time, maybe I'll have charts for it, okay? But as it is now, I'm just going to tell you about it, okay? And you visualize it in your mind. A few weeks ago, a month ago, the 10-year was at 3.5%, okay? Now it's at 2.9%, okay? So it's gone down 60 basis points in a very short period of time, okay? And what that's telling me is the bond market doesn't believe that that Powell is, has the strength or the fortitude to really see this thing through. There's a flight to safety, and since people are buying the longer end of the curve, they're discounting, so to speak. Again, this is my opinion. They're discounting, so to speak, the fact that once the economy starts to soften, Powell's going to start printing money and buying bonds again, et cetera, et cetera, et cetera. So I think it's very interesting that a lot of the market participants, I believe, still think we have the Fed put and still think the Fed will come to the rescue if the economy softens. Now, you had softening in retail numbers this week. You had some companies reporting like Kohl's lowered sales. You're starting to see a lot of margin compression on the earnings because of inflation. I predicted this 6 months ago. And I think what's going to continue happening is, and the reason I'm still very bearish on the market in general, is I think that you're going to have to see earnings estimates come down. Okay, they're still way too high. And I think valuations are still way too high for a bottom. Okay, you're around 16 times earnings on the S&P right now. Earnings estimates are still way too high in a hyperinflationary environment. And so I think we have further to go on the downside, as I've said. And so I would look at these rallies that we've seen as bear market rallies and opportunities to sell things and raise cash, as I've said many times on this channel. The one thing I have to say is, I'm not like a trader. I'm more of a long-term investor, okay? But I do like to trade. And one of the things I'm just loving is I just love being short the market right now. I love being short the QQQ. And this SQQQ, which I've talked about on this channel before, I'm just loving putting that on in my portfolio, a nice size trade when the price is right, and just on these down days, just loving it. and it's not, it's nothing I'm going to get rich on, but thousands of dollars of profit when the market goes down. It's pretty cool when everything else is going down quite rapidly. And I would suggest it to you guys if you have a lot of say tech stocks that you want to hold for the long term, and you've decided you're not going to sell. It's a pretty good what was that? It's a pretty good hedging mechanism to put into your portfolio to hedge against the downside risk. And the great thing about it is you don't even have to short. You're going long the index basically. It's an incredible trading vehicle to use. And years ago we didn't have this. We would have had to have shorted an index, or in the years before we had the QQQ, we would have had to short the Nasdaq, or we would have had to do options on indexes, which are much more complicated. But now you can just go short the QQQ with the SQQQ, or you can go long the QQQ with the TQQQ. So you can have some fun with that trading if you're so inclined. Just an aside. Another very interesting thing that's of interest to the channel is energy, right? Goldman came out this week and said they couldn't be more bullish on the energy market, i.e. oil and gas. They said that they see oil going to 140 in the near term. And they said, really echoing a lot of the things that I've been saying for a very long time on this channel, is that I've never seen the fundamentals and the technicals of the market line up so favorably for oil and gas. And specifically, my two favorites, of course, are Exxon and Chevron. That's the way I've been playing it. And I thought that, not that I believe everything that Goldman comes out with, but I thought that that was an interesting data point for us. Exxon's been bouncing up and down and bouncing up and down. It went up to 91 recently, and then it came down this week to in the 85 range. Of course, I did a video when it hit 104, and I said specifically in the video, even though I was still bullish on Exxon in particular and oil and gas in general, I made a point of saying do not buy it here because it's massively extended at 104. Okay, and it proceeded immediately to go down within a week, down 18%. Okay, so now we're down around 85, which is more than 18%, I think. And I would, at these levels, I would buy the dip. The dividend's over 4% now. Still just a great value, and between the geopolitical situation, the domestic political situation, I'll talk about that a little bit more in a minute, and the supply-demand imbalance, which is not changing anytime soon, all of those things combined to equal bullishness on oil and gas and Exxon in particular. All right. Now, normally I would put up the Exxon chart now and talk about it, but you guys just have to visualize it. It's down to around 85 and change. Definitely buy the dip at this point. One of the things I thought was interesting relating to that particular subject is Biden, of course, was in all these international meetings, and he was on the national stage, and yesterday somebody asked him, essentially what they were asking him was, is it worth it to back Ukraine in the war with Russia, because the longer that war goes on, the higher gas prices will remain, right? And they said, they asked, how long will you continue to support Ukraine given these high gas prices are virtually crushing the American public? And Biden says, as long as it takes. Okay? So Biden is basically saying on the international stage that he's going to support the war in Ukraine for as long as it takes, meaning that this war is going to be just prolonged. It seems like Russia is making some advances, and they're entrenching, and it doesn't look like it's going to end anytime soon. It doesn't look like the sanctions are cutting off Putin's supply of money, cash coming in. As I mentioned on other videos, India is buying a tremendous amount of oil from Russia at a discounted number and then reselling it to China. There's all kinds of bad actors doing all kinds of bad things throughout the world. So the money's going to keep flowing in there, and that's going to continue to keep the situation in place for the foreseeable future. Okay? Well, that's pretty much what I had planned for this particular wrap-up. Just to summarize, I think that the market, you're going to continue to see up and down days. You're going to continue to see perhaps violent upswings, violent rallies, but these should be viewed as bear market rallies within an overall bear market. We're going to have at least 2 75 basis points increases in the Fed funds rate in the near future, and I think that is going to continue to create a lot of volatility. We're seeing slowing in the economy. We're probably already in a recession, and that slowdown in the economy is going to continue. So for the foreseeable future, I believe the overall direction of the market is down. Use these markets to raise cash and live to fight another day, so to speak. Don't fight the Fed. And as far as this channel goes, I'll continue to give you information related to the markets, related to the economy, to Fed policy, and also specific stock recommendations and trading recommendations. I'm starting that also this week, with the whole purpose of making you a better and richer investor. Okay? Well, thanks a lot for joining me on this live stream, and if you're watching the replay of it, I appreciate you watching. Thank you very much for joining, and if you got value out of this, please like and subscribe and hit the bell so you get notified of future videos and live streams that I come out with on this channel. And I appreciate you watching, and thank you very much, and have a great 4th, and I'll be coming out with another video shortly, and aside from that, I'll see you next week. Okay? Have a great 4th.